Guru Nation, thank you so much for watching and listening. Make sure you like, subscribe, comment, and share. It really means a lot to me. What a perfect day to bring on Joel White. The markets are bleeding right now. It's Black Monday 2024. I was actually even smirking about it last night when I saw the noise happening about
Yep.
today's market open. I said, oh, perfect day to bring on Joel White. A lot of people know you from LinkedIn. And by the way, if you don't know Joel, everybody go underneath the video and in the show notes is his LinkedIn. I think it's a must follow. He's got really in-depth content he puts out specifically around the CROs, but he dabbles in the site and vendor stuff too. Um, and like kind of like a no BS guy, which is what I like. Uh, Tells it how it is, straight shooter. He's the one you've called, correct me if I'm wrong, Joel. You called the CRO market top a while ago, no?
No, I don't think so. And I don't even know if I'd say it's a top. It's hard to say right now. We're recording this
Ah,
on those listening in the future, Monday, August 5th, 10 a.m. The markets are absolutely getting rocked and preparing for this. I had charts ready. Those charts look worse than they did over
those charts,
over the
refresh them
weekend.
and they look worse.
But yeah, I don't like to call tops, and especially
Mm.
from a longer term standpoint, I don't think it's it's practical, but I look at, especially CROs, look at it from a longer term time frame, and
What
anything can
would be a
go
fair way to
anywhere. But
put it?
yeah.
You were critical of the business model, or what is a fair way to define kind of like your
Oh, I'm
stance
I'm
on
a
CROs?
homer. I'm a homer for CROs, and I'm a big believer in their long term potential. I can't remember when it was. I think it was a week or two ago. I was catching a guru after dark, and one of the it wasn't
Ah,
Chris. I forget the other guy's name. Said in
Robert,
10 years, yeah, in 10 years, CROs will be gone, or they'll just be site networks. And I
what do you
believe
think about that?
I believe the complete, absolute opposite. And we can walk through now related some data and charts to show where the trend is. Trends can always change. No trend is permanent. Well, some might be, but not in the not in the clinical research space. And yeah, so I'm a big believer in the long term potential, even if they're
Really?
getting absolutely slammed today, like everything else. Yeah.
I know you were a contrarian on something. Maybe it was the site networks, or you were
Oh,
a
I'm a
contrarian.
I'm a I'm a in terms of LinkedIn, I'm a contrarian in believing that CROs provide serious value, always
Ah,
have,
there we go.
and over the long term will for a long time. And one of my more popular posts was in defense of CROs, because they were just getting smashed. I know they do things wrong from time to time. I've been on the CRO side since '06, but I know they do a lot of things right, and I know they do a lot of things that nobody else does, but they have to do it. Yeah.
Well, I guess we could start with that. So Robert Goldman came on. Um, a lot of the statements we make on those after dark are not hyperbole, but they're definitely condensed. Like they condense our thoughts into
Yeah.
simplistic, generalist viewpoints. There's obviously a lot of nuance. I'm sure Robert will be the first one to tell you, but he does feel that way. If he had the gun to his head and pick, hey, 10 years from now, CROs still the same like powerful force they are today or a lot less, he's going that way with a lot less. I tend to side with him as well. So it's always good to bring on somebody else who can kind of argue the other point. I think it makes us all better and more informed in our not decisions. I'm not investing in any of these things, but I'm a
Yeah.
player in the industry, and it's helpful to know where the CROs are going to end up. So what's your like overall thesis, I guess, for why CRO? First of all, 10 years from now, so
Yeah.
2034,
Yeah.
do you think CROs are more important to the industry than they are today?
More important, yes. And one of the things I was going to bring up, it was about a little over 2 months ago at Icon's Investor Day. Their CEO Steve Cutler, who you talk about the straight shooter. He said that as of today, they run about 10% of their trials go through their site network, their Excel Care site network. That in and of itself is a huge number for any CRO. He said that over the coming years, he wants to grow that to 30%. 30%. He's going to, and that's the focus of their M&A going forward. They haven't had anything the past few months because they've been refinancing their debt. They might want to wait a little bit to do that
Yeah,
with what's
wait a
going on
little
with
bit.
interest rates. Yeah, but they have had and continue to have an extremely aggressive strategy around expanding their site network and having almost like their enclosed ecosystem around it. And I don't think they'll be alone. I do see further consolidation across the top CROs because they are the ones who have the capital, the financing to do those types of acquisitions. While the CROs I work with, small, mid-size, they just don't have, they don't have the bank account to do it. They don't have the access to capital to do it. Because you know what the multiples are in the space, and what it takes to scale to some of these where you have like dozens and dozens of sites. It's not something where it's worth it to just buy one. To buy one site or buy two if you're a CRO. There's got to be some scale where you can go to a sponsor and say, hey, for this vaccine trial, we can just run it in our whole network ourselves. So I think on that basis, over the long term, I do think that in 10 years, you will see a large number of sites in-house at CROs. And I think that will make them more important than ever, to the companies that they work with, right? Because it allows them to run more and more clinical trials within their own walls. So I think that's important. I think that there's a lot of tailwinds behind biotech funding over long term. When we look at, if and when we look at some charts of the CROs of the long term, I mean, it's up. Yeah. And
What?
I think the supporting atmosphere around it of the tech providers and things like that continues to be very weak. And so I think that the CROs will over time become more and more successful of having their own in-house technology that can be used across a higher percentage of the landscape.
Okay, two things there I want to discuss, but like over encompassing everything is this frequently forgotten law of capitalism that
Yeah.
profits are generally competed out. So there's like a first mover advantage, right? IQVIA had it when they were quintiles. You would see huge profit margins, and that attracts other competitors to come in. Eventually, they outcompete the profits down to where I think we are now, where it's basically ubiquitous to monitor and to do like the core services of monitoring. Like you can't really have like a price premium on monitoring or data management. Those are basically ubiquitous. So you have to stay within the realms of what's competitive, right? And
Mhm.
there's five major CROs that basically dictate the price. This is your wheelhouse, right? Is this correct so far? Like what I'm saying?
Yeah, it's correct. In pure economics, it would be a perfectly competitive market
Yeah.
tends to tends to perfectly take profits to zero over
hmm
the long term. You mentioned monitoring visits, data management. Those are case studies in how certain services have become commoditized. But CROs are always looking at what can we get into that's not
Right.
commoditized.
And
So
that's
it's
what led to this tech stuff, this tech boom over the last decade. All these CROs having their in-house tech. And you actually make a strong bull case for the CROs. You're saying, hey, all these site-centric tools that are out there, uh, they're not really gaining traction. And at the end of the day, the sponsor's going to choose the in-house version of what the CROs have. Is that your like one of your main arguments
Yeah,
for?
when I say they're not getting traction, is that they're not moving like the total economics of the industry. I would want to see these companies starting to do tens to hundreds of millions of dollars in annual revenue as a sign to me that they are actually driving huge outsourcing trends. If a new startup comes along and they've got a few $1 million in revenue after a few years, like that's great, and that's great for them, but that's not moving the needle on the industry. That's why, a year or two ago, I was trying to avoid writing about Science 37 whenever I could, because even though it was flashy and interesting and like on the rocket ship down, the blown up rocket ship, it wasn't moving the industry. It was doing like 10 to $12 million a quarter a revenue, which is something that an IQVIA or an Icon will do, in a few days
Mhm.
or weeks. So I
Mhm.
look at things that are genuinely moving, like the economic trajectory of the industry, and maybe the tech players will beat themselves up enough that some will start, levitating and standing out from their own, and making their mark. But then some of the larger non-CROs are doing that. But like the Averas, WCGs, they're definitely working hard on that. You've got some site networks like Velocity that are building their own site infrastructure or their own tech infrastructure
Mhm.
with their own people. But yeah, I'm just not seeing it yet. Whereas you look at what the big CROs are doing on technology, and it's clunky and it
Mhm.
takes time, and it's not necessarily their core competency, but they're busting their asses to make it. So
Yeah. IQVIA is probably leading the way as far as they always have been as far as innovation, and
yeah, I
now
agree.
they're doing their single sign-on, and everyone's complaining, well, it's a walled garden. Well, what do you want it to be? Like they're a
Yeah,
I'm the first one to come to their defense on some of these posts I see on LinkedIn are ridiculous. Like they're not a nonprofit,
yeah.
they're not a charity. They're here to compete. Um,
Remember when people used to say that Apple, would
yeah,
rue the day it created a closed ecosystem? Yeah,
worked out well for that.
worked out well for them. Yeah,
Until today, until Black Monday. But
yeah,
Joel, there's an argument continuing with this. You compete profits down. So
yeah.
okay, that's why they pivot. That's why the CROs pivoted to tech. That's why they're pivoting to sites. I think the market, the profits margins for sites have not gone down necessarily. You write about this too, I think sites, and I actually agree with you. I'm not in that camp of site owners that say sites are underpaid. I actually don't agree with that argument. I agree more with you. Like, if you know what you're doing, you're more than fairly compensated.
Yeah, some are better at business than others. Yeah, yeah.
Some are more
Seriously,
experienced in
seriously, you're
knowing
one
what
of
to
the,
ask
yeah,
for.
you're good at it. There's plenty who aren't. Yep.
Well, shout out to Chris Aubrey. He does all the budgets, and
Yes.
I think I gotta put you
Awesome.
guys together, man. If we can like take your brain and his brain and make it I think that's the next startup that actually does well. Um, so do you ever see a world where all the sites figure it out? Let's say there's this magic tech, maybe there is this magic AI that comes in and says, "Hey, we're gonna negotiate your budgets and contracts for you." And now basically site work has become commoditized to where it's like a monitoring. Like you can't ask for too much more. They always try to use Sunshine Act and all that stuff, but there are sites that do way better. And now with the site networks, it's more economies of scale. Like, okay, you negotiate a good budget. Now how can you scale that? Do you ever see a time where competition kind of brings those profit margins down at the sites and site networks?
For that to happen, Dan, some of these networks would have to be so large that they'd be perfectly okay with that.
Hmm.
Things are so decentralized now in the site landscape that I just don't see it. And
2034, do you see it?
I don't know. I don't know. And on the AI side for me is so unpredictable. There are parts of it that I just think are amazing. And then there are parts of it, like before this call, I went to IQVIA's homepage and it's AI, right? It's like, come on, man. Come on. One of the one of the newer, excuse me, one of the newer IPOs in the industry within the past month or two, Tempest. It's, they're not called Tempest, Tempest AI. And even though that's just like one sliver. So, I'm still myself figuring out, where AI is going to go. I use it a lot, like in my personal life, basically to replace a lot of Google searching. But where does it fall with clinical research and the factors you're talking about? Um, I'll believe it when I start seeing it. I think we'll start seeing it someday, but 10 years from now. I don't even
You,
know. Whenever I think of 10 years from now, I think of 10 years ago. And right. And then
I
that's
mean,
that's
yeah,
just
10
like,
years ago was a different world, but many things were still here. Like there was no real site networks, there were SMOs.
yeah,
Tech was not really holding. You were not able to create like the same kind of site like I have in Yuma. I could not replicate this exact same model in
Yeah.
another city because the tech would be different. There was no tech, like we had to build it all in-house, and most sites don't have their own developers. That's not their core competency. We didn't have the private equity we do today.
Yep.
Um, so there's a world where that is possible, where the site profit margins kind of get competed down. Um, but I think we're living in the CRO profit margins being competed down, and they're looking for the next verticals, which sites is a big one, like you said, with Icon being one of them. What do you think about the site networks like the Velocities, Dow Kansas of the world that are building their own capabilities? They could flip a switch and offer monitoring services to sponsors too. Do you think that's a threat for the CROs?
Could be. Yeah, could be, especially if you get some of these, really significantly scaled um, operations. When I look at it as a competitive threat, that's when I don't see it so much because CROs offer vastly more than monitoring services or even data management, get into biostatistics, regulatory support, safety monitoring, um, commercialization, pricing and access. I could go way down the list. In fact, I mentioned that in defense of Ciro's article. I did go down
Yeah.
as much of the list as I could, and I could have gone a lot longer. There are so many things around those handful of prevalent services that no other organizations you know right now perform or even want to perform or are capable of performing. And then that's where the CROs have always made their mark as full service providers, full service. Not that, not to be confused with FSP, which is functional service, where we'll just do your stats for you, whatever. Full service outsourcing, because we talked about commoditization. Commodities work for things that are sold in thousands or millions. So barrels of oil, coffee mugs, etc. Clinical trials do not meet that definition, even if there are thousands of them, because no full service clinical trial is the same as one that was run last year or one that's run next year. So it in and of itself is is something that's opposed to the idea that it's all going to be competed away in a commoditized framework. So it's all about how do you package your services and now your technologies and potentially companies you own, like sites and RTSM and so on and so forth. How do you package it together into a solution that's super appealing to sponsors? And you mentioned IQVIA, it seems to be ahead of the curve on technology. Icon is ahead of the curve on um, on partnering. They talk about it because they're putting things together to make it as attractive as possible to a large pharma, and they talk about it a lot, and that's driving where they are buying things and not buying things, and trying to be innovative. Yeah.
Yeah, good point with like the studies, ultimately and the lowest common denominator, the most important factor is the patient. No two patients are alike. They're not like corn corn oil that you can trade or whatever the commodities are. They're not, every patient's different, every study's different. So that is a fair point
Yeah.
in
You
making
want me to
your
show you a couple things?
yeah, yeah, let's look at these charts and
So
refresh wherever you guys are at because this is bloodbath day.
yeah, it is. Yeah. What I've got here is I went up to MedPace's technology site. MedPace. The reason I brought up MedPace is you talked about 10 years ago. Well, they went public about 8 years ago in the mid 20s, and they are now priced at nearly $400 a share. Now, are they going to exponentially go another 10 to 15 times in the next 10 years? Yeah, probably not. But that is a long-term trend that I pay attention to. What's interesting about MedPace is, among many things, is look at their tech stack. Now, I've only seen screenshots of ClinTrack before. I don't pretend like it's the most amazing thing in the world. I've heard different things about it, but this is MedPace's branded tech stack for clinical trial technologies, and it probably doesn't have everything that you could ever need on it. But you look at the um, range of capabilities that it covers, And then when you see this, you also have to keep in mind that MedPace has its own central lab, bioanalytical lab, its own early phase clinics. I'm here in Columbus, Ohio. It's just about an hour and a half down the street from me. In Cincinnati, I've been on that campus. It's incredible, but it's got its own EDC, things like that. And this is a company that does not acquire other companies, and does not really outsource much and tries to keep as much as possible in the U.S. until recently they're starting to move stuff to South Asia. But long story short, you look at these and you say, how can you call this commoditized unless everybody starts doing this? But few CROs can do this, except for the larger and largest ones. So, that certainly stood out to me as something for MedPace. Go over to IQVIA here, and solutions. So if you go to research and development, right, you'll find something that talks about how great they are at monitoring, all right, and how great they are at data management. But as you just kind of click through and look at this real world evidence, tell me what sites, what other service providers, what startups can handle and address all of these real world evidence capabilities. Commercialization, how many sites, so
None.
on and so forth,
Zero sites can do this.
can provide a commercial sales force for a pharma. And then you gotta go macro a bit more. Companies like this can provide all this while also running full service clinical trials. So they're absolute monsters. And there's a reason that their revenues have continued to grow over time, and the percentage of their R&D spend that they are outsourcing continues to grow, is because just have all of these different capabilities. And if I pull it up, icons and others, you start seeing that. So, I don't want to use too much of a stock term that I'm bullish or whatever on these different companies. And none of this is financial advice, of course, but you just look at how CROs have adapted. If you went 10 years ago and went to IQVIA's website, one, I think it would have just been quintiles, and it would have been extremely heavy on labor that people are performing, and now it's very different. And
Yeah, and they don't even
yeah,
mention the site stuff yet, and that's a huge part of their business too.
yeah. The one who does is Icon, because
Hmm.
they've got kind of the pole position on it. Them, and I would say PPD, but PPD doesn't get a lot of public information about them because they're just a small part of
Thermo.
Thermo,
Yeah.
um, unfortunately. And their site network is a bit more of a decentralized structure, but it's substantial.
Hmm.
But I was mentioning a few minutes ago about um, how the market is heading for CROs in terms of, are they going to grow? They're going to disappear? What kind of issues are they going to run into? This is from a recent Icon presentation, which I thought came from excellent data sources, and it's the same type of thing that I've been seeing for years, and these things continue to be relatively accurate, which is you see a significant, mid to high single digit revenue potential for CROs. You can look at this long-term chart here of R&D pipeline size and see. Well, you say, well, that's great that a pipeline is growing, but what if they're outsourcing less than it? Well, they're already outsourcing 53%. This is all plus or minus, and it's continued to expected to grow, now up to 57 over the next few years, and that has been a major long-term trend towards increasing. So I think that's helpful. Hopefully, that's helpful perspective for people who wonder about the short, intermediate, or longer-term trend of what CROs and service providers in the industry are looking at. Anything could change any moment, especially when we're talking on days like today where the market is getting absolutely creamed.
Yeah,
But
but both of these only down like 3% today. I looked.
yeah. You step back and look at some of these macro trends, macro data, and all of this is publicly available information. And it's tremendous, fun to be a part of. Yep. But that's why you don't see me as a doomsdayer on the CRO side. They know
Yeah,
how to
Icon
adapt.
down
Yeah.
on the worst day in years in the market. Icon and IQVIA are both down like 2.8%. right
Yeah,
as of this morning. I mean, that's probably the first hour of trading's when the most panic is
yeah, and that's
expressed.
after. Yeah, so I've got some. This is just a an analytics platform I use. So this is the Nasdaq Biotechnology Index. You can see long term. I mean, this goes back. We're in 2000s and late 90s. You could see in terms of the performance of smaller biotech stocks. You could see if I drew a trend line through this, right, be up and to the right. If I look at the large pharmaceuticals, this is an index of the Novos, Lilly's, Pfizer's, et cetera. Yeah, draw that trend line up and to the right. You
Same.
look at IQVIA, since it IPO'd right about 10 years ago, a little over 10 years ago, up and to the right. That IPO 10 years ago is $44. So they're up by what, times six, times seven? Icon. I'm not calling no top, Dan, because that top was just a few weeks ago. All right.
Yeah.
I mean, you look at this thing. That's an absolute long-term monster. I don't know what'll happen tomorrow or a year from now or 5 years from now, but I know a trend when I see it, and
Yeah.
that's a trend. Look, I mentioned MedPace. Look at this thing. That is a parabola, right?
I didn't realize until you mentioned it how MedPace is killing it. Like that last year, they have a pretty bad reputation from as far as like
Yeah.
employees are concerned. But that graph, you can't argue with that.
Yeah. Went public, what, almost this day, 8 years ago at
Wow.
yeah, 20 some dollars a share, and it's can't do the math multiple real quick in my head. And you get some new entrants like Fortria, which is just a spin out, but too early to tell. This is like the Mount Everest. This is Charles River on the
Oh.
early phase and preclinical side. You get your Mount Everest effect here.
Hmm.
So you get some up and downs, and I just threw Viva on here
Viva, yeah.
for good measure. But that's obviously they are a tech player, and this reflects a bit of some struggles, but it's also this is all COVID free money days here in the
Yeah.
middle, right?
Yeah.
So I put all these together, and I find it pretty fascinating. I don't think we need to get into the Chinese stocks and stuff at the bottom, even though I just saw a phenomenal LinkedIn summary by you, the slideshow on
Ah,
what's
yeah.
going on with China and the Biosecure Act. And
Hmm.
we'll just say briefly that there were issues before then, but you know, boom, I mean, we're talking Farmeron, Wuxi, et cetera.
Hmm.
These are the Chinese CROs, just in brutal
Yeah.
shape. But
And
back
a
to the
lot of
big
that is
dogs.
geopolitical things as well,
Geopolitical. Yeah,
which are out of our control. Security concerns
yeah,
from how China handles data
yeah,
security, which hint, hint, they don't handle it. They handle it for their benefit. So yeah, all that's actually back to being bullish more for the U.S. CROs and global CROs
yeah. For
outside of China.
multi-year time frames, it shows that CROs know how to adapt over time, that there is a growing R&D spend over time, and that CROs continue to capture a higher and higher percentage of that spend. Someday that'll change. I don't know if it's in 10, 20, or 50 years, but AI will probably have a lot to say about that.
Hmm.
But would I rather go long $10,000 of CROs bundle of stock or go short over 10 years? Yeah, I'll take that
You
long
go
side.
log.
Yeah, yeah,
Well, if you look at that at those charts, basically you just put best of breed, biotech, best of breed big pharma, and then the best of breed CROs and the best of breed tech company, Viva, and they're all basically chart looks identical,
yeah.
more or
And
less.
full disclosure, I mean that's where it gets a little biased. If I showed a lot of small, if there were a lot of small and mid-size CROs that were public, a lot of them would look quite different. But there's
Mhm.
over 600 or 700 CROs out there, so
Yeah.
that's not. It's always going to be biased. But Dan, we need site networks to go public. We need at least one or two,
You think their
and
charts look the same? Sites, I mean, they're not public, so you can't tell, but you think there'd be a similar chart for some of the best of breed ones? I know the site networks are relatively new, but they've been around what, like 5 years now? maybe 10,
Yeah.
the velocities, and Alcanza, I think it's more like 5.
I think definitely some sites you would have seen that Mount Everest of the vaccine studies,
Mm-hmm, hmm
21, 22, and then
I
going
know the
back to Earth.
vaccine, like
Yeah,
when investment bankers are looking at sites, they discount vaccine revenue. They
yeah,
don't
yes,
actually
it should.
include
Yep.
it in the multiple, but what the site owners do, the ones that do vaccine trials, we don't, not yet at least. They use the vaccine revenue to pay their ownership, right?
Gotcha. Yep.
Because when one of the things investment bankers do when they make an offer, a lot of sites, a lot of site owners don't pay themselves. Like us, we pay ourselves just quarterly dividends. We don't pay ourselves a salary. The ownership group, they actually will put that cost on you. Like they'll hypothesize, well, what's a fair salary? So they'll lower your EBITDA basically
Yeah.
with a salary. So a lot of site owners know that, and then they use the vaccine studies to basically pay for their
Yeah.
salaries, which is not a bad idea.
And
As a site owner myself that has refused to do vaccine studies, maybe it's not such a bad idea after all.
yeah, it seems to me, I mean, this is a part of the market that I'm just not as close to, but I definitely saw a number of sites get hyper concentrated in like Pfizer and Moderna studies
Mhm.
and struggling a bit to diversify, outside of that. I think I've heard you talk a lot about diversifying your study portfolio and things like that, and couldn't agree with you more.
And the big driver, and I think a whole entire new white space is going to be around the diversity action plan. These sponsors are mandating that. The regulators are mandating it. Therefore, sponsors are going to expect that as a service offering from the CROs. The CROs don't really have a good answer to that. None of them, other than, well, we have, our sites that we've come to use over
Yeah,
the years, and they're all in these locations, but it's still not enough. So I think there's going to be huge room for growth, regulatory mandated growth in that white space slash vertical that we haven't seen before, which can probably add to your compound annual growth rate chart that you showed, which Icon probably didn't even have that in as a projection because this was a
right.
relatively recent mandate from the FDA. So there's even more growth potential is the whole point of all this. And you make a very good argument for the relevancy of CROs. Now, outsourcing, you say, okay, well, the way to grow profits is to outsource overseas. Latin America has been
No, it's
huge,
it's it's
man.
happening. I'm
Huge.
mixed on, yeah, on how aggressive you get with it. Yeah.
Have you been to Mexico City?
No.
I encourage you to go and visit their, they don't really have a research triangle park that I'm aware of, but they have
Yeah.
like a part of town where all the CROs are, and then they have a part of town where all the pharma are. Like, and you name it, every CRO is there. Every big pharma is there. Like all of them. And if I met with some of the workforce, the management, the middle managers, English perfect, educated, like it's a must that they're all some kind of science background,
Yeah.
whereas here in the US that's not the case.
Dan, I used to have a team at a CRO I used to work at. I had a contracts team, and part of the team was in Argentina.
Hmm.
I was in contracts, right? So I was not on a very pleasant side of dealing with sponsors and such. Like it was a negotiating group, and I would have clients who would ask me to work with the Argentina team because they had such. It wasn't just they had perfectly fluent English, just sounded nicer. They were probably nicer to deal with than me, right? But I guarantee they were. But it was a wonderful team, and you had that time zone
Yep.
consistency, and that is so underrated.
Yeah.
So underrated. As someone who led global teams, man, if you're out of the U.S. and you're looking for like a more flexible cost base, um, yeah. South America, Central America, it can help a lot. Now, you run into a lot more political and economic volatility, but
Yep.
if you're committed to the long term, it can be an excellent option.
Well, I can tell you that the CROs are not looking to buy sites in Mexico. It's
Yeah, yeah,
completely different. business environment out there, but when it comes to their core services of tech, things that you can't have taken away from you, um, it's a no-brainer. Like outsourcing the financial services, like sites that email and complain, "Where's my payment?" That's lately that's all been Latin America or Europe for me, like as a site owner. And
Yeah.
I don't really the Eastern European ones are annoying because I know if I'll email them like on a Monday morning, it's already evening for them. So unless I catch
Yep.
them before they leave, I'm not getting a response till tomorrow. But in Latin America, it's
Especially you're on
instantly,
Pacific. Yep. Yep.
yeah. But in Latin America, instant reply back. Like they're on the same
That's
time
right.
zone as me. There's a lot. I think that's underrated feature, like you said, and I do think that's room for growth for the CROs. Now, as far as job prospects for the U.S. CRO workforce, I don't know what to tell you. I mean, I don't think it looks very pretty here. Um,
Huh.
what do you think about that as far as, I know that's a little outside your core competency, but
Dan, for the record, my degree was in labor economics, not just
so it's
economics,
right
labor and
up your
economics.
alley, man. All
And
right,
I've got a
let's do
chart ready
this.
for you right now. This is from a Bloomberg newsletter I got over the weekend, I believe. Now this is fully U.S. based, but and this is total economy, not industry specific. But you can see here, you just look at some of these notes here. Long-term unemployed, sorry, go down to this one doesn't have the unemployment rate, does it? That's okay. The unemployment rate is at 4.3%. Historically, fine, but it's increased from 3.7% not that many months ago. And when you see it increase that quickly, that's when you start getting concerned. And when I looked into the Bureau of Labor Statistics report on it, most heavily hit are information services, workforce, and what we call white collar jobs, for just lack of a better term
Hmm.
for it. But you can see, long-term unemployed trending up, work, forced to work part-time when they want a full-time job, trending up. Ignore that. Multiple job holders. Now, these aren't CRAs pulling down two jobs, which is still a thing. It is also another long-term
Yep.
trend, Dan. But this is a multiple job holders, a sign of economic pressure
Mhm.
across the spectrum, trending up. So a lot of those bad things are trending up. Now inflation is trending down, but it could be for a bad reason. We'll see. Only time will tell. But when you get clinical research industry specific, you and I spend a lot of time on LinkedIn, and it looks bad, and it is bad. It is bad. Um, but I attribute just through, I work majority is with CROs, and so just different conversations I've had with different executives over the past couple of years. And it's not just this industry, how difficult it was for owners and executives to hire in 2021, 2022, and what that experience was like, the bottleneck of getting people in seats, and the massive turnover and the demands that were put on companies. I'm not feeling bad for any of them, but it's like, I need to position myself to not have to go through that again.
Yeah.
And so I've noticed a lot of proactive reductions in
Mhm.
force for the past year and a half. And again, I'm biased towards the CRO side. Those are continuing to happen. MedPay, for like the first time in its history, my knowledge, that they're starting to move more of their IT. It's just on the overhead side, not PMs and things like that. They're moving it to India, and other locations out there. They really tried to hold off as long as they possibly could on it. It's all public information. Other CROs have been doing it for years, but yeah, you're definitely seeing a move towards what can we do to make sure that doesn't happen again, because that was very torturous for a lot of the management teams at these companies during those couple of years. So there's also
Not
macroeconomic stuff going on, but yeah, you're definitely seeing a reaction to what happened in those 2 years and what it meant to try to lead companies during that time, for companies who provide services, people performing labor, and how difficult those times were. It's like, got to make sure that doesn't happen again.
Are you referring to the COVID hiring boom and
Yeah,
people
yeah.
jumping ship and all that?
Oh yeah, yeah,
Hmm. Hmm.
yeah. Huge attrition,
Yeah.
which a lot of the attrition metrics are back down below
Yeah. Yeah.
pre-COVID. You're just seeing like a snap reaction to the other way.
No more
But
complaining about your job. You
no more
lucky
complaining
to
about
have
your
one.
job. Pay increases are moderating
Mhm.
rapidly, things like that. So um, yeah,
Mm.
we'll see what happens. But yeah, it's it's a it's a difficult time for really any type of role where you're in information services or
Yeah.
kind of behind a computer,
But on the flip
working with
side, on the
yeah,
flip side, because we always try to give Guru Nation advice, personal
yeah,
development advice. So it was good to talk market and all this, but like you personally maybe are a good example for what a lot of people who work at CROs can do successfully. Um, you're an independent consultant now, and
yeah,
you've leveraged your expertise over the years from CROs. For anyone that wants to learn more about Joel's uh, career, you could watch our first interview. We get into it more.
yeah.
I'll have a link underneath part one with Joel. Do you think what you have done is achievable for others, like in the
Yeah,
multiple
yeah.
white spaces that exist?
Yeah, where I'm a little different. Yeah, there have been self-employed people in the industry at scale for decades. The typical example would be a CRA contractor. All right, you're paid on an hourly basis, and then that rate fluctuates and evolves over time, and your workload fluctuates and evolves over time. I do project-based consulting, so I'm kind of in a different different universe from there. It's we're going to do a project, the fee is X, and we move on. I don't get paid by the hour or anything like that.
But it's a
But
white space, right? It's a white space that existed.
yeah, and what's even more of a white space for me is I don't work with any biotechs or pharmas
Hmm.
intentionally. Like I just don't like that side,
Hmm.
working that side of the industry. I just work with service and technology providers for multiple reasons we can get into if you want. But I just wanted to work on that side, and I did not want to work on an hourly basis. And so that's kind of like where I've nestled in. But there continues to be, and I think there will always be huge opportunities for self-employed people, for CROs and all other types of service and technology providers in the industry. Because over time, you see it with the gig economy, you see it with others, flexible resourcing. Okay, I need 20 hours a week from someone for 3 months,
Hmm.
right? I don't want to have to hire and then fire.
Hmm.
So there are plenty of opportunities out there, and I would say it is here than ever, Dan, legally, technologically, et cetera, social media networks, being able to leverage your connections to go out on your own.
Yeah, Reid Hoffman made the
Yep.
prediction by 2034, half of the workforce will be gig economy.
Yeah, yeah. We'll see. I would not bet against that. I would
Your
not bet against that.
100% of your work is gig economy, and in
Yeah.
many ways, same with me. Like,
For 3 years. Yeah, 3 years. And I wouldn't change a thing. Now, it's been successful in large part because of the timing in which I waited. And I waited until I lived through a couple CRO transactions before I did it. And there's some other financial stuff, but that I needed to have in place before going out on my own. I was not the daring entrepreneur with $100 in the bank account, right? Before I went out on my own and risk it all with, wife and three young kids. But yeah, it's worked out. It's been great.
and you've made a
Um,
brand for yourself. Like people know you. I know you from your posts, your
yeah,
articles, and they're somewhat controversial, although when you actually look under the hood, they make a lot of sense. They're just
always meant to be
controversial.
helpful. Yeah, it doesn't mean it always is, but I always try to intend it to be helpful.
I
And
remember
my
one of them,
philosophy,
I read it. I don't remember which one. This was a year ago, and a few of my
yeah,
site colleagues were like pissed. They're like, "Who is this guy? Did you see this article?" And I can't remember what it was, but I'm like, well, I don't know, but let me have him on the podcast. And then I got to know you, and it's like, no, he actually makes a lot of sense.
yeah, I try to, and I just for business purposes, I hope that if I'm out there and helpful enough that good things will happen.
Hmm.
Because Dan, I don't know if you do the conference circuit and things like that. I can't do the conference circuit. It's just not
No,
it's not my
just
personality.
SOS. Would you come to SOS?
No, no, because it's not.
The sites are not
You asked
really
me
your
last
thing,
year, and I
right?
felt bad saying no. It's just
Oh, I did ask you that.
yeah. First and foremost, I hate conferences. All right, I just don't like going to them.
I'm with you.
So
I'm
the
with you.
ones I would go to, like I would have to be, really, really. I can't even see a way. So, anyways, I've got to bring in inbound interest, and I just said early on, I'm not going to be the guy who goes out there and puts little teasers and too much self-promotional stuff. Maybe it happens from time to time, but I just wanted to be helpful to
Yeah.
people. I'm also like in a stage of my career too, where you've got to give back like you do. Like you're the ultimate example of it. You're building a business and you're giving back at the same time. So it's worked out terrifically. But I would certainly say, Dan, that probably the number one reason I see people go out on their own and then go back in house. I don't hold anything against them, is that they're not willing to develop a brand or a
Yeah, brand.
reputation
Yeah.
for themselves.
I
And
agree
yeah,
with you 100%. I do think that some of the positive stuff out there for the workforce, we can end it on some positive stuff. Well, Joel, this whole thing has been positive on the Bloodbath Monday that it is. He said, "Hey, this CRO, biotech, pharma, look at their long-term graphs. I mean, they're up and to the
yeah,
right." I think one of the most positive things, one of the most positive messages we can give the workforce is the white spaces. So where the CROs cannot necessarily compete well are all the white areas in between their verticals. Like diversity is one of them. That's actually going to be a huge white space that eventually will become a
yeah,
vertical. But
yeah,
right now it's not, and nobody really has a plan. Everyone needs a DAPS plan. No one has one. That's a
yeah,
diversity action plan for those that don't know. There's vendors, there's companies, freelancers, forget vendors. There's just individuals out there that are experts in that, just like you are experts in pricing model for Zero. They're experts in this diversity plans. And
yeah.
I think there's going to be a lot of people doing well in these white spaces. So if you're someone that's just been laid off, try to flip it on its head and look to where, not where you can fit in another company's ecosystem, but what those companies need that you actually can offer and start doing it. But yeah, it involves around building a brand, unfortunately.
Yeah, yeah, good friend of mine. I didn't check with him before this call, so I won't mention his name, but he's got it. He's got an excellent, social media presence. He's not like as aggressive about it as you or I are because he's been in house for a long time, but he's developed it to such an extent that employers are just begging for him because they know once they get him, he doesn't like bring his client list in a bad way, but everybody's interested in where he just went to, and he lives on the CRO side, and so
Mm.
he's not even in a business development role, but opportunities just follow him because he's established a brand for himself, and he's just found a good way over time to work with the companies he's worked at, to make that mutually mutually beneficial. Yeah,
Yeah, I think we'll
yeah,
be seeing a lot more of that over the next decade.
yeah.
Um,
But what's tough about LinkedIn? I was in house from '06 to 2021,
wow.
and uh, it's just don't post on LinkedIn. If you're in house at a CRO, you just don't.
Yeah, it's
Just no one ever
taboo.
told me not to. No one told me not to. It
Yeah,
just never felt right doing it because it's so hyper competitive and secretive and
yes.
things like that. Yep.
And there's an element of like, hey, I'm working for someone else. Like, should I actually post this? I even had those
Oh
feelings
man,
when
yeah.
I was a contract CRA for 3 years, like on the
I didn't know
side.
that. Okay. Yeah.
I've been doing gig economies my whole career, man, but I
Yeah.
had a site that was not doing so well in Orange County, and I got a pretty big tax bill, and I was like, I need to like start doing some contract CRA gig to pay this off. And I had to deviate just a little from my normal posting routine. Like I couldn't be as aggressive with some other things because I was no longer just representing my own companies. I had
Yeah.
to think about who hired me, right? And it was a small Korean CRO. They probably could care less, but still, I had it like in
So
my head. It was on my conscience, like, I probably shouldn't, get that aggressive
I know.
with
I
it.
understand. I was there. I was
Um,
there. Yeah, and I'm not super extroverted, but I always had. kind of that desire to put stuff out there like that, to share information and try to share the stuff that I would have found helpful and knowledgeable as I was growing in my career. So that's been one of the big benefits of being out on my own is I'm kind of unleashed to do that. And yeah, yeah, there you go. Now, none of my clients at the moment are publicly traded, so I can also talk freely about publicly traded companies. And for the record,
You,
I don't own any that we've talked about today, but
I don't
yeah,
either.
I really enjoy, writing about those things.
All I own is one biotech. I'm very bullish on it, but I've done videos on them. So do you think there is room, as we wrap up,
Yeah,
for new entrant CROs to come into the market, or is it too late?
it's never too late to come into the market and start your own. It is my smallest client is 2 employees, and they have a network, a large network of dozens of CRAs and other roles. And Dan, you can do extremely well in a year, 12 months starting a CRO, if you can find 1 or 2 studies. That's all it
Yeah,
takes.
it's all you need. Yep.
Easier said than done, obviously, right? Easier said than done. But if you get it done, it can be life changing. You're like, why the hell did I ever work in house before? Well, there's reasons you worked in house, there's skills you learned, but it's never too late. What opportunity is there for small and mid-sized CROs to gain the types of huge strategic partnerships with large pharma and the larger biotechs, where those organizations are demanding all-in-one shops as much as possible? That's that's more difficult because then you've got to have access to some capital to buy things or develop software, et cetera, to get on par there. And there's definitely a chasm growing there. But that should never stop someone from going out on their own and providing superior service on smaller studies
Right.
to any size company. You can do that extremely well, and you can make an immense amount of money in a short period of time.
Yeah. As someone who's been on the small CRO side, RFPs, and there are enough private vendors, small vendors, to compete more or less with a
Yep.
CRO on a project. And we've done a few times recently and lost. Maybe I'll go public about it eventually. But there, I had to bring out my Rolodex for those
Yeah,
youngins that don't know what that is. It's your phone contacts, your
I know what it
LinkedIn
is.
contact.
For the record.
Yep. And you just say, hey, I need this. I need a TMF. I need a ePro. Like you just kind of put it all together because you're right. What we just talked about the whole hour, the CROs have all this in-house. We don't. So that's where they can outcompete us, but we came in relatively competitive, man. I mean, that's where they also make their money. The margins are still in that tech
Yeah.
stuff, which we have to pay retail for as a
I know.
non-owner of these
Yep.
IPs. So,
Yep.
yeah, that's a lot of interesting stuff in the CRO space and in the site space together, and it's definitely going to be interesting watching the two converge, like Icon is pushing for.
And yeah, just last note on that. I think any industry, it's never a bad time to start a business. It never is. It never is. Um, as long as you've got everybody's unique, so everybody has something unique that they can start and and unique value that they bring to the table. So I would never dissuade anyone based on really any economic timing from going out on their own, because you're not unless you're trying to start a $2 billion business in the first year, right? Then there's times that are better than that than others. But if you're just trying to go out on your own, replace your salary, and then times two, three, four, five that, over a period of a small number of years, there's never a bad time to do that.
Right.
There's
And
better
I,
ways to do it than others, but the timing is, I would say, it's irrelevant. Yeah.
yeah, the biggest barrier is that fear because once you get a project for yourself and you realize what it pays. And then you're like, well, what
Yeah.
was my salary before? I was worried about replacing my salary. But that's the biggest thing is just getting to that first yes, which could take months, 6 months, could take a year if you don't know what you're doing or longer. It could never happen if you don't know what you're doing. That's the hard part. It's
Yeah.
not really replacing your salary once you have a project. That's relatively simple.
Yeah. There was a recruiting guy on LinkedIn. This was several months ago, saying, "Hey, you're going out as a CRA. You want to go out on your own? Take your prior salary plus 20%, and then divide it by 2,080 hours a year." And I told him, I said that is a recipe for people to go out on their own and quickly go back because you need more upside and you need more upside potential and you need a lot more downside protection, um, especially just in those crucial first 12 months.
Yeah.
But yeah, I wouldn't want anybody to be dissuaded by timing. Timing is an excuse. It's not a. It's an excuse either not to go out on your own or not to stay out on your own if you don't have immediate success. It's not a. It's not a reason.
Yep. No, absolutely. Since we've been started the podcast, IQVIA is now down only 2.6%
Okay.
as opposed to 2.9 when we started. So on the bloodiest day of the year and maybe of the decade. Um, yeah, probably of the
It's
decade.
bad. Yeah,
Since
it's
'08.
a
Is
hell of
this worse
timing
than
for us.
'08?
Yeah.
Was today
No,
worse than
no, no,
'08?
no, no. I
No.
remember, Dan, you mentioned last night. I remember during COVID. I remember in Q1, Q2, 2020, I remember checking
Yeah.
the Sunday night futures. I think the limit down is 5%, right? The futures can't go down more than 5%.
Mhm.
Like the stock exchange will just cut it
It's
off.
shut down. Yeah.
I remember multiple times you just open up Sunday night, limit down, just limit
Yeah.
down.
Yeah.
And then it would just be an absolute
Yeah.
monstrosity.
And your
That was
charts that
terrible.
show up and to the right, like to end it on a positive note. '08. I remember '08, still a side owner. Um, I remember that day where Bear Stearns, Goldman collapsed. Um, I remember like that week we had three of our studies stopped at the site. And that's because a lot of those pharma had their money tied up in those banks. This time around, that's not the case. It's like a Japanese yen crisis. I don't think and I think the pharma learned a lot from that too.
So I think a lot of people did. Um, Even COVID or the .com stuff never felt like '08. '08 was the only time where I thought if the big banks go down, it's anarchy. And
08 was different, man. I remember that week, that Monday, I never seen the stock market impact my site that quickly. Like
yeah,
same week, hey, two, three studies, hey, stop screening. We got that email like the next day. Stop all screening on this study. Then I got the similar email on another one. And then a week later, I had monitors that used to monitor us ask me for recommendations on LinkedIn and stuff. Like it
yeah.
was fast.
I think any generation that grew up, they have pivotal moments that shape how they view things in the future. For me, it was '07, '08. So I was in my mid 20s. We were starting a family. I was early in my career, and I'll never forget that. Never forget that stuff. It's
Me
terrible.
too, man. That also same age, around the same age, and relatively new business. And I just hired and expanded to other sites, and then that happened. It's like uh, horrible timing. But you learned from that.
Yeah. But to bring it back on a positive note, if you look at a long multi-decade chart, '07, '08, it looks like this.
Yeah, yeah. And oh
Yeah.
07, oh 08 helped me realize for 2020 that this too shall pass. That became one of my
And
favorite lines I say to myself. I'm not religious. I know it's from the Bible. This too shall pass became powerful for me. Like when things are on fire all around you, hey, just
yeah,
this too shall pass. And your graphs show the same thing, basically, up and to the right. And this does not feel like, oh wait, this will feels bad. There's a lot of pharma,
it was
big pharma
rocky. Yeah,
down,
rocky.
especially the
Yeah.
Japanese ones. I got some studies with some Japanese
Yeah.
sponsors, but down 6% is not down 30% in a day, 25% in a day, like what was
Days in a
happening.
row. Yeah.
Yeah.
Yeah. Yeah.
hmm
Man,
Well,
the yen is just getting, oh my gosh.
I have a
Even
few
on a
Japanese
long-term chart, it looks
sponsors.
bad.
Not gonna lie, I'm a little concerned about the Japanese study I have, but I think we're okay. We just started screening on it. Think we're all
Dan, I
right.
feel like we could do an all-day live stream, like, oh, what's going on in the market
We
today. We
should
better
like
we
meet
better not
Kevin.
do that. Yeah.
We can do like a meet Kevin for pharma. That's a white space right there. Nobody's done it. I don't know why anyone, I would do it if I wasn't doing this. Um, Somebody out there do it. I know there's somebody out there who got laid off that loves pharma stocks. Become the meet Kevin of pharma.
Yeah.
Joel, thank you so much for coming
Thank
on.
you.
Everybody go connect with Joel. His LinkedIn is underneath the show notes and under the video if you're watching. If you're listening, I recommend watching the videos because there's graphs and stuff in the middle. But if you don't want to watch, just up and to the right. Spoiler alert. That's what they look like. Um, Thank you, Joel. I really appreciate it, man.
Thank you.
Like, subscribe, comment, share. Go connect with Joel right now. Bye bye.